Welcome, welcome, welcome. I am Janitor Stanton. We have Reginald Perryman and Shaka Williams. We are TSARE. This is the There's Something About Real Estate podcast where we talk all things real estate. And today we have special guest, Darius Kellar. And it's about to be a good episode because he's gonna tell us some stuff.
From Pontiac.
I really
Pontiac,
just want to talk about this workout stuff. I don't want to talk about Shaka being from Pontiac and him being from Pontiac.
Y'all gonna gang up on us. Yaktown in the house. And we know we got Blade and them got that same from y'all. You gotta remind me 1,001 times.
The dance and everything.
The dance too? Mm-hmm. All right. Y'all gonna claim that? All right.
We came from Pontiac.
Okay, so what's going on?
Do you know what they're talking about? Or is that like before you?
Are you talking about Blade Icewood?
Yeah. Okay.
A little bit. I think.
He's 33.
Do you know the dance?
No, I don't know the dance. No.
All right. Well, we'll do it after the show. We'll show you after the show. Yeah. But we is gonna boss up and get this money, right?
I know.
Right?
Yes.
Talk about that.
Yeah, so I want to know a little bit. So I watched your other interview, and I'm very curious to know like how you became comfortable with investing. Like, how did you get here? Like a little bit of,
Yeah, so I started in 2014. Very struggling, very bad. Totaled my car. Like I said, I was a janitor for 10 years. I was living in a house with 7 people. So with a daughter on the way, I was still in college at the time. So I was just looking for a home, looking for a way out. And I saved up to $10,000 and I went out there and search for a house. It was tough at that time because in 2014, even though homes are cheap and we're still in a distressed time value wise, you still would have trouble trying to purchase a 10 grand home. So like I told Shaka, I bought my first home on Shirley Street in Pontiac. It was $9,100. And it was a complete disaster. I thought the house had copper in it. When I got the keys for the house, it didn't have copper in it.
Did it have anything in it?
The walls were up and stuff, but because I saw a sink, I didn't know how to even fix a house up at the time. Because I saw a sink, I'm assuming that there's copper. Because I saw electrical panel, I'm assuming that there's wires. And there was nothing. There was nothing in the house. I didn't take the time to look up above the panel or look below the sink.
Okay. You know the Shirley Street that he's talking about?
I'm from Shirley Street.
That's okay. All right.
The way I started from ground zero. When I bought that house, I actually met an engineer across the street, a young guy named Saron and Kathy, and I offered for him to use the restroom if he needed any water because he was also buying an investment property across the street at the time, and I was nice to him. He pretty much showed me the way. I mean, he showed me how to do electrical, install a furnace, things like that. And once I've done it, one time with him, I kind of knew how to, remodel homes.
Right.
Doing your own work.
At least do some of the major tasks.
Right.
Mm-hmm.
Okay, but you said you were struggling, but you saved $10,000. I mean, the people that aren't struggling can't save or have a hard time saving $10,000. How did this?
So it was like you get the tax return checks, and plus I'm living with 7. There's 7 total people in a 2-bedroom house, so you can imagine.
We were really save a lot of money.
And we were over there by Pontiac Northern, over there in Madison at the time. So
okay.
So this had 2-bedroom house, no basement, baby on the way. It was a real struggle. Plus I used credit cards as well during that time,
right, to
accumulate the money.
But it's still even the mindset because you're looking for a primary residence. This is the house you're looking for your family and your new baby, right?
Yeah, well, I'm taking everybody, the baby on the way.
You taking the other 7 people too?
It's me including the 7. I'm taking the mom, the dad, the brother, the sister.
Oh, so you just going to a bigger house.
I'm just trying to get
that was your goal.
Right.
So all the weight was on you to make that transition happen.
Yes.
Or he just made it.
You felt
you took charge and said, I'm going to do this.
Yeah, that's typically how I put everything on me.
Right.
So, yeah.
All right.
I mean, it's impressive, just to hear, because we talk about mindset with purchasing already,
right?
And then you not only you took a fair amount of cash, small amount of cash, and then because I'm wondering, like, well, how did you have the wherewithal to say, well, now I'm going to go and fix it up if you never fixed a house before?
Well, I didn't even think about that. I thought that because new roof,
right?
The walls were up. I thought that I could just live into it.
He thought he bought a house.
I was clueless.
So
Gotcha.
you just seen it at a glance, and you was like, okay, the sink is here, so it must be plumbing. The electric box is here, it must be wiring there. Right. So that was your mindset. But the $10,000 you saved, you kind of did that just out of discipline, and because there were other adults that you were splitting the bills with, right?
Yes.
So you had the means to save a chunk of that money up front.
Yes.
But I think what Janitor is saying, how old were you at the time?
You said how old?
Yeah, were you when you bought the house?
This is 2014. Yep, there you go. Yep,
okay,
24,
so
25.
All right, so most 25-year-olds are not taking that leap of faith to say, I'm going to save $10,000 and not buy a bunch of Jordans and be here with 7 people and just go buy a house.
What made you go into, I mean, I want to know what, so I got to 10,000, but even to get to the 10,000, he hadn't been thinking about real estate prior to the 10,000, right? So,
oh yeah, definitely.
So when did real estate enter?
Desperation. Desperation. I'm living in the house with my wife's dad, and I got a baby on the way, and I totaled my car.
Yeah,
I'm still a janitor. I know I'm about to finish my master's degree in 2014. So I know I got to eventually get out there, pay student loans, find a job.
Right.
So was it on a whim, or did you? So this was on a whim, like you just like shit. The easiest way to go make some money is in real estate.
No. I was just trying to live. I was just trying to say, okay,
right.
if I buy a house for $10,000, I don't have to pay mortgage.
Rent, right.
Maybe I can.
I'm pressing this so hard because you just don't understand how people just can't get here. So we trying to like, okay, who did you talk to? What infomercial did you wake up to?
No, it makes sense. He's saying shit. He just wanted a house.
Yeah.
He wasn't even trying to invest.
Yeah, I'm trying to just survive.
Just trying to buy a house. Okay,
right. But then I also told Shaka that I bought a house on Sanford Street for $2,500.
But why?
And it's because I was like, because I understood when I was looking for my first home,
right?
I was getting beat by people just with $10,000. I'm trying to buy anything. Homes that collapsed steps, collapsed roofs. I'm looking for just anything in Pontiac at the time,
right?
And I bought a $2,500 house. People kept saying I'm stupid for buying it. And I was like, these other homes are selling for $10,000. Why shouldn't I just buy this house and and maybe fix it up or something? So maybe my wife's dad and family can live over there. Maybe I'm thinking
right.
But
so when you bought the first house, so it sounds like, and correct me if I'm wrong, you bought the first house and you learned about repairing and doing the renovations. That gave you the courage and the skill set to do the second one. So you didn't have the same fear on the second one. You was just like, I did it once, I can do it again. Was that the mindset?
No.
Okay.
The second one, I was completely out of money then.
Okay.
And the second one actually took me 2 years to remodel. Like I'm talking like this was, like I told him, the first one had the walls were up. The second one was a complete rehab I had to pull all the permits. First of all, like all the permits had to be pulled. Inspect. The city jumped on me about the house. That was the reason why I got it so cheap too. Is because it was in condemned
demo list.
It wasn't demo, but it was condemned. It was condemned. Yeah.
Okay.
Condemned list. So it was a complete learning lesson. But luckily, I had Cerrone and I had the tools to fix it up. But you got to imagine, like during that time frame from 20, because I bought the second one in 2015 to 2017, I messed up because I thought I was trying to do the Dave Ramsey trick, save up every dollar and, go to work and fix up the house out of your pocket.
Right.
But the values went from 10,000 to like 50,000 during that time. Right. And also during that time, it's extremely hard to borrow money.
Right. Right.
And so between those variables, what I should have done is I should have bought up a bunch of homes, boarded them up,
right,
and then came back later in 2020 when the values came up. When Amazon shows up, then resell the properties,
right,
or refinance the properties,
right.
But I messed. That's where I messed up. That's
You
where I
ain't
messed
messed
Well,
up.
hindsight.
I
Right.
messed up 'cause
Yeah.
it still sound like you made out pretty well. You still have that property?
Oh, absolutely. Yeah.
Okay, well you ain't.
Plus, the
that's
city
it.
was gonna mess with them. So I'm gonna tell you what was gonna happen. You wasn't gonna be able to just buy the houses up and board them up and just sit on them, because then the city was gonna start pushing you to make. So when you bought one, they probably weren't tripping on you about the time frame of rehabbing everything. But once they would have seen your name on a few of those,
Yeah.
they was gonna be like, nah, you got to start moving, and then they would have started trying to put your stuff on the demo list.
Right.
City of Pontiac is.
Yeah, so
Yeah, he has horror stories.
But now that same $2,500 house is probably worth about 200 plus.
Right.
I own most of the land, right? Not all the land on the corner,
Right.
But I'm own majority of land for a single family house on that street. It's sitting on a triple lot.
right. Sweet.
So now the reason why I'm saying that house is so valuable, because the city of Pontiac will not sell open lots to investors without plans to build. So you can't just buy up lots and hold
Right.
them. Yeah.
And you already got lots,
Yes,
pretty
yeah,
much.
yes.
So you,
So, but when did you become an investor into real estate? Like, when did your mindset shift to now this is what I'm doing versus what I need? I need this house because the daddy need to be here. My baby need a house.
House number 2. This when I bought Sanford, the house, which is the second house. When I purchased the third house, I was trying, learning how to do the refinance, method, the Burr method is what they call
Right.
it. That's when I really understood what I was doing, and I knew that I could buy 9 houses. So,
wow.
but I didn't. But it took me a few times to learn, like to refinance and to purchase a property, to say that I really understood the method.
Right.
Okay.
But
So
you was all out of pocket, out of everything. So you had no loans still, or you was using credit cards?
I used a combination of credit cards and a home equity loan through the credit union on my first property to finish up my second property.
Oh, hold on. So we missed us. So
Yeah.
all right. So you got the first property,
Yes.
2014, and you started rehabbing it. My man showed you how to rehab it. How long did it take you to rehab that for you to move into?
That took me 2 years. It took me 2 years to rehab the second properties, because like I said,
The first
the
one.
first one that you moved in.
The
Yeah.
first one, it was like a year and a half.
Okay.
I kind of like, as soon as I got done with the first one, I went to the second one,
Right.
because it was only 2 streets away too, so it was very easy.
Okay.
Yeah.
So then you went to a bank or a credit union?
I went to like a Genesis.
Genesis?
Yeah,
Okay.
yeah.
So you went to Genesis, and you like, Genesis, I own this house, and that you bought on a quitclaim deed or a warranty deed?
I bought that on the warranty deed.
Okay.
Through
Talking about your very first
my very
one,
first
right.
one, I
Yeah.
bought through homepath.com.
Oh, okay.
Oh, yeah,
Okay,
yeah. So, yeah.
You got all
And
clear
the
title.
website was different during the time I was buying
Yeah,
too. It was a
yeah.
lot different. So
Right.
I had a bidding war when I
Right.
bought the
Yeah,
home.
yeah.
It was completely
said he had
So
a
you
big
brought,
one,
just to
shit.
give people a background, in 2014, we had started really recovering. So that's why you seen the appreciation from 14 through 17, and that's why it went from 2,500 to 50,000 during that short period of time, because the market was rebounding from our recession here. So go ahead, you can finish.
So then you went to Genesis, and then you asked for a line of credit, or did you? Was that what you went?
It was a loan. It was a loan. So somebody came out and they did a thing called a drive-by appraisal. It wasn't, they just pull up to the
Right.
curb and assess the property from the curb.
Right.
So it wasn't, a thorough appraisal.
Right.
And that, I think the value was only like 30 or 40 grand at the time. Values were still distressed. And so they gave me like 30 grand or whatever, and I used that money to fix up, well, not totally the entire second property, because 2 years is a long time. I used a little bit of that money to fix up the second property, and I also had some money left over to get ready to buy the third property.
Right.
Okay.
Then what?
I purchased the third property. At that time, I had about 35 to 40 grand. I purchased the third property through auction.com.
Okay.
And it was it's a learning lesson.
Yeah.
Purchasing through auction.com.
Yeah.
What I experienced is that you have to, the bank reserves the right
Right.
to bid against, to place a bid against
So
you.
you brought
in
a property that was in redemption period, probably.
It was a foreclosure property.
Yeah.
It was a foreclosed property. But when I'm thinking I'm bidding against actual people,
Yeah.
the bank's actually bidding against me at the time.
Right.
They have more
They're not
capital
going to lose. Well, they don't want to lose their.
They don't want to lose their investment.
So,
yeah.
Yep. Up to the reserve amount, I believe.
Yep. The reserve amount. Yep.
So I probably bid it over like 5,000 to 10,000 over the reserve amount to get the property, which I thought was way too high at the time.
So auction.com doesn't have a to buy now button. You know what I mean?
No, it's a couple different options depending on the bank. So sometime the bank will sell their interest only.
Mm-hmm.
So like let's say it went to sheriff's sale, the owner got 6-month redemption period. Sometime the banks used to put properties on there and they'll sell their interest. You got to wait out the 6 months.
Right. So that particular property probably didn't have that option.
No, it was just probably open market bank on, and he was bidding. But what he was saying, they was driving the price up because they wouldn't. It's not an absolute auction where whatever you bid, the highest bid win. It had to meet that reserve, and he went over. So was there, when you were bidding, were you emotionally connected to the property? Like, I have to win. Is that why you went over?
No, I understood the market very well at that time.
Okay.
So the property was 3 beds, 2 bathrooms, finished basement with a 2-car detached garage, and it was off of right near Dixie Highway.
What's the street?
Kenny Road.
Oh, okay.
So you can imagine it. You know, it's almost located near Waterford, where values are a lot higher.
Yeah. Why do you feel like you overbid then if you knew it was going up?
Because if you look at like Zillow, you can see a lot of the properties were still $10,000 to $15,000.
Right.
And then I'm buying this property sight unseen, so I couldn't go inside the property or anything.
Oh yeah.
But I just knew from looking at the outside, I knew I could hit a home run.
Today, you feel like you paid too much, or you just feel a little slighted because you didn't realize you were bidding against the bank who was driving that price up?
No. Today I'm very happy with the purchase.
Exactly.
Just to put in perspective, somebody purchased the lot right next door for $99,000 all cash. So that gives you like a little bit how much value is there. Exactly.
So I want to clarify this for the people. So when you say you overbid, you paid more than what the house was worth based on that time and what homes were selling for in the area at that time. But in the overall grand scheme of things, you didn't overbid because of what the home is worth now.
Exactly.
Okay.
That is correct.
So that's a lesson I want people to understand. When we talk about values, sometimes the value of the house is what the value is to that individual.
Mm-hmm.
So everybody else was like, nah, this is where I stop. To him, he was like, oh yeah, it's worth this amount, even though I'm overpaying for it at its current value, but I'm buying it for a different reason.
Did you have so did you really have a strategy, like a loan to value that you wanted to stay under then? Or you just was
but I knew that the property would be worth a lot more, and I was like I said, it had the 2-car garage, the finished basement, multiple bathrooms, so I knew right away that was better than my second house.
And the area,
my second house only 2 bedrooms, and it was it just had it wasn't appealing on the outside,
right?
And like you said, the area. So like I knew that this was probably the best house I could get for $35,000.
Right.
Where's the wherewithal and the foresight coming from? Like, are you reading? Do you have someone that's like guiding you and educating you?
YouTube and Bigger Pockets.
So you're just a fan of. I mean, I don't know why, but it's blowing my mind.
How long has Bigger Pockets been?
They've been around for a while.
Do you under? I mean, are you getting that from me though? Like, it's kind of blowing my mind.
I see where you're going.
Right.
So like the house that we were living all in 2014 was my wife's uncle's house, and he had bought a bunch of properties in the Oakland County auction, fixed them up real quick, and we were tenants in his property. So that's where like the idea started to come.
Okay, makes sense.
Right.
Because we all have, Reggie's story is more similar to my mother was in real estate. His grandmother was in real estate. Shaka just was smart, I guess.
I just jumped in. Similar to you, but different. But not quite exactly like him.
Yacktown.
Huh?
I said Yacktown.
Yeah, and so sometimes, and that's what I'm, trying to explain. Like, people often, it's, just people that I experience or deal with, it's just not understanding like the value in the land and owning property and things like that. And I listened to you talk on the other podcast, and you talked about what's happening in the community, what's driving your ideas. and things like that. And so, it's intriguing to me to see the perspective and how you got here.
Well, what's really tripping me out, well, not tripping me out, is just your ability at that age to have the mindset to say, I'm going to be disciplined enough. First, I need to do this for my daughter. We can't stay in a house with 7 people this small. Then I had the mindset to say, okay, we're in a bigger house, but this still not comfortable. I'm going to buy y'all a house to go stay in so we can stay in this house. And then you took the journey from there. Oh, if I did it once, I can do it again, and I can continue to do it. And the discipline to save that money specifically just for this while working as a janitor and being disciplined with your credit. So was there any influence prior to you buying that first house to say this is how did you even know to manage your money that way and your credit that way?
So in 2015, things got a little bit better.
Okay.
I actually got a job with my degree.
Okay.
So that did help a little bit in 2015.
Right.
That was after I bought my second house.
Right.
But when things got trying to answer the second part of your question, you're asking like when did things get like?
Well, it's more of
The
like a
uncle.
mindset.
He talking
like,
about the uncle. Remember
well, the
uncle?
uncle is one part of it. He's seen that. What I'm saying is the mindset. None of this works without the mindset, right? And I'm thinking of the average 25-year-old living that got a child on the way and having access to $10,000 cash. We know a lot of 25-year-olds, they not going to buy a house.
And they just not interested in real estate in particular.
And they definitely not interested in buying a house they got to fix up. Like all cash.
Yeah,
and that's going to take 2 years to have the discipline for a year and a half, 2 years to do it. Was there any influence or you think it was just in you?
I think it's just in me, just trying things. I mean,
Right.
this is like my second podcast now, so
Right.
again, I'm just
He owned it.
You just like it.
I got it.
You're liking it. You're enjoying this, right?
yeah. I mean, you get a rush before you come in. You
Okay.
know, you get the rush.
All right.
No, I
it's
mean, I'm
like-
talking about the real estate in particular. So,
And I bought it a sight unseen too, so that says a lot.
Yeah.
You spend $35,000 your third house, don't really know much.
Right.
You know, and you're essentially gambling.
Right.
Yeah.
Literally.
Yeah.
Literally.
Yeah, basically,
Literally
yeah.
Yeah.
So I got a question though. Where'd you get this? So all right, I know you had some money left over from the first equity line, right? You spent some on the second house. Where'd you get the money to go buy the third house?
The remaining of that, plus I was saving money because again I wasn't paying for a mortgage. Well, the line I was paying for.
Yeah, but
I did rent. There is some rent I did accumulate from the second property.
Right.
You know, it's discounted. It's family. You
Yeah.
get the family budget.
Yeah,
You know,
right.
so
and then you said you started your job.
and also in 2015 I did start.
And
my
what's your
job.
degree in?
My degree is in business. I have a master's in business, but I have a job like in as an engineer, like CAD. So like it's like a 3D.
Oh, yeah.
So yep. So it's a little bit different than what I went to school for.
Right. A lot different.
I'm an engineer by trade.
Gotcha.
Okay.
So you saved some money up from working, and some of the money from your equity line, and money that you made from your first BRRRR, which is
Exactly.
your second house, and then you went to go buy the third house.
I went to go buy the third house. So when I bought the third house, that's when things got interesting because now the market's a lot better than 50,000.
Yeah.
The market was, I think the value came up when the appraiser, there was 2 appraisers that showed up. The first appraiser was from Quicken Loans, and he said the house was worth 50 grand. I'm like, there's no way this house is worth 50 grand, you know? So we went through another bank. I think it was Prime Lending at the time.
Prove the
Okay.
point.
And they sent their appraiser. It was magically worth $85,000.
Yeah.
And I ended up taking, the 75% loan to value was like 60 grand or so.
Right.
I took that money and I spent all of it on a condo. Like I think the condo was like 52,000. That's by Notre Dame. Almost,
Yeah, I already
going
know.
towards the palace.
Yeah,
Yep.
A condo to live in or
it's still there. I mean, off of
condo-
Updike.
So the condos over there, it's like it's a condo for an investment.
Okay.
I was going to, trying to
Right.
make money now.
You was hooked.
Oh, yeah.
So I'm sorry.
So wait, hold on. I want to ask, Was the condo nicer than the house you were living in?
Oh, the condo, I liked it because I didn't have to touch anything.
Right,
It was just
but I'm
buy in
saying
Yes.
the area, the design, everything. Was it a nicer property than the house you was living in?
Oh, absolutely. Yes.
Okay,
Yeah.
I want everybody.
The condo was 2 bedrooms, 924 square feet.
Right.
It's a 2-unit building. Oh,
Right.
I'm sorry, it's a 4-unit building, but the 2 in the front, 2 in the back.
Right.
And we own just that corner there.
Right.
So that 1 unit.
The reason I'm asking that because I'm kind of building a path here is discipline, structure, and sacrifice. So a lot of people, again, going back to that mindset, a lot of people said, oh, this is the nicer house. I'm going to go live in a nicer house. But your mindset had already switched to investing. So you didn't care that this was nicer. You said this was a better investment for me. All right.
So now you're in your fourth house.
Fourth property. Yes.
I need a pause because it's a little petty in me, but you had enough wherewithal to not accept that first appraisal. We talked about this, and it's letting people know that you don't have to accept that first determination. You can go to another bank and have another evaluation, and you were willing to do that.
Yeah. So I was number one. You pay $500. I think it was $550 for the appraisal, and that really bugged me. Again, I'm cheap, so I was like, should I really go and get another appraisal? Which I did, but yeah,
But it worked out for you.
I got lucky. I got lucky,
No, so you make your own luck, right? So you didn't get lucky. You was moving, and when you move, remember I was telling you when you move, things happen.
Right.
You know what I'm saying?
Right.
I guess it's part of if you don't gotta get ready if you stay ready, right? He was staying ready. He was aggressive. He was the aggressor.
Right.
You know what I mean? At every point, he wasn't just sitting back waiting on money to fall or looking for a hustle. You know what I mean? This was a real thing. This is a lifestyle, pretty much for him. So okay, so you bought a condo over there.
$55,000 is really not that far from $85,000. So it's not like it's not like it went from 55 to like $200,000 during that time. So,
Right.
Well, that's 20,000 plus more dollars that you gonna have to go spend on your. You wouldn't been able to buy that condo if you
And so
didn't
that
get that
additional
extra.
500 was worth it.
Yeah, if 500 turned into an extra 30,000, I'd invest that all day. When you look at it that way.
So the condo was an experience because it's in the HOA.
Yep.
I'm thinking, okay, with the HOA, because the HOA maintains the outside, I only have to maintain the inside. This should be a piece of cake. I was making like $549 after expenses. That was my profit each month, and I was like, I'm gonna take these tenants from my third house. I'm gonna put them in the condo, and their relatives are gonna move into the house.
Yeah.
That's literally how it went. But I ended up having to sell the condo after about almost 2 years of renting it out. It was like about a year and a half I had it rented.
Right.
And I ended up having to sell the condo because I had issues with the tenant.
Yeah.
And it was more so just like noise and stuff like that. But the market was like peaking out at that time, and I knew the condo was only probably worth about $80,000 at best.
Right.
So I was like, okay, if there's a time, so what I should do is I should put a HELOC, home equity line of credit, on the condo, go purchase another investment property,
Right.
and then sell the condo with the HELOC on it. So therefore, I don't have to pay the tax. I don't have to worry about taxes.
Right. Another strategy.
Right. So
Had you learned this from somebody at this time? You had to have picked that up from somebody.
So, I pay. I'm going to work every. I'm a W-2 employee, so I got to pay a lot of taxes, right?
Right.
So I went to YouTube Academy
Yeah,
to learn how to at least know about what I'm doing.
Hey, wait, hold on. Shameless plug. That's how he found us on YouTube, right? So he's here now. So go ahead. So you learned something from us. We learned
He emailed
something
both
from
of
you.
us. Look, when I messaged you, you called me, and then I messaged him back like, "Hey."
I said he ain't responding quick enough. Let me email her.
That's what I'm talking about. That's the second appraisal. Yeah. All right. So you did the HELOC, and so you can avoid the capital gain taxes when you sold the condo.
Yes.
Okay.
So I sold the condo for like $65,000. My
Okay.
wife's actually a realtor, so I had her
Okay.
behind me. She's also the one who sold me the property that I used the HELOC on to
Right.
to,
So
for
he
the,
double
And that's
dipping.
what I was wondering
she
because
getting
I'm
the
like,
commission
who's
and
telling him
everything.
about homepath.com auction got, I was going to ask that you have a realtor. So your wife is licensed?
yes.
But she
You
wasn't
made
a
her go get
realtor
a
at the
license? Or
time,
you
though.
not made
No,
her?
she wasn't a realtor until I bought the condo.
Oh,
Yeah.
okay.
But you
So
said go get your license.
I'm sorry. It was after I purchased the condo is when she became a realtor.
Gotcha.
Yes.
Okay.
Sorry about that.
Whose idea
because she
was
was
it
also
for
a
the-
janitor with me.
Oh,
So so what happened is I refinanced the third house. I bought the condo. When I bought the condo and put the tenant in, I said, "Hey, go ahead and quit being. You don't have to be a janitor anymore. I got this under control." So
That's what I'm talking about.
I got her a laptop. I paid for the schooling for the to be a realtor. She got the license to be a realtor after she quit.
Right.
And then by the time those 16 months was up, she was already underneath. I think she was underneath Berkshire at the time.
Yep.
And so what I did is I bought another investment property. It was actually a house. Went back to house,
Right.
single family
Saying
home.
get away from them
Get
condos.
HOAs.
Yeah.
And I probably got about 12 to 16,000. It was like that's what I accumulated between the rent and the after the sale. It was like a $16,000 profit on the condo.
Right.
So I made out pretty okay
Yeah.
during that time. Now the fourth property, which is it was the fifth property if you're including the condo. It was a single family house from a wholesaler.
Yep.
So someone passed. He got it for $10,000 under contract, and I came in and bought it for $42,900. Waived all inspections. I mean, the house had just was listed in MLS, and I mean, like I seen the house, I couldn't even believe my eyes. It was a 2-bedroom house, basement with a 1-car garage, and the house next door is probably worth about $250,000. Like I knew.
What year?
You are like bugging me out because he's like in these 2 beds, 1 bed.
Ain't nothing wrong with. I tell
I'm
people
not
that
saying
all
it
the
is,
time.
but it's still just like,
So
man,
They have
I wouldn't
7
even looked
people
at
in a
it.
2-bed.
So I like to. So there's 2 things. I want to explain what is a good deal. How do I define a good deal?
Okay.
And I define a good deal based on the build price, the cost to build the house, regardless of what it looks like. I take 1,000. If the house is 1,000 square feet,
Right.
I take that and I multiply that by $150. During that time, it was about $153 per square foot to build a property at the time from the ground up.
Right.
And so that'd be about $150,000. So that's what I'm looking at when I'm evaluating what I'm buying.
Okay.
And then I'm trying to buy the smallest property, but in the best area, but I'm trying to scale the rent up as high as I can. So that 2-bedroom property was in a very good area, and it was,
Right.
and I rented out today for $1,400 a month.
Right.
So I bought it for $42,900. I put
Right.
about $5,500 worth of work into it. It was just
Right.
it was very very basic work,
Right.
and I also refinanced that property as well.
And you want to know one thing too? He pointed out that I don't think it probably went over people's head. When you buying 2-bedroom properties like that, you have little to no competition. You have competition, but not nearly as much with your 3 and 4 bedrooms.
I'm not even paying attention to it. So you don't even
yeah,
got
a lot of people.
Yeah, I was gonna say, yeah.
I guarantee you, 90% of the investors that call us looking for properties, they all want 3 bedrooms or more. They don't even want us to send them 2 bedrooms. So you snuck in that niche and you got your formula and it works for you. And it's like, man, you kind of hate for people to see the show now because
What year was this?
I think this was like 2018.
Okay.
Oh yeah, so the market was
It was here. It was coming
it
back.
was here. Yeah,
It was the
We have
beginning.
arrived.
Yeah.
yeah, it was arrived at that time.
But Amazon didn't show up just yet.
Right.
Yeah. Pontiac.
It was
Now we hadn't even talked about yet. We're gonna get to that. So this is that property. Now you speak about Amazon by you being from Pontiac. At this point, at what point in time did some of the new development and proposed development start impacting how you were investing?
So when Mayor Waterman, she became the mayor, that's when the developments, the idea of Pontiac was getting better,
Right.
was really starting to appear.
Okay.
For example, the biggest thing was getting rid of the blight, the boarded up homes.
Right.
Just a few years ago, maybe 2 years ago, 2.5 years ago, she announced that there was 0 blight, meaning that there was no more boarded up homes in the city of Pontiac. Like we still have blighted schools. Like there's some schools that are still boarded up, but not single family homes. So there's no more homes for demo. No more homes sitting there condemned.
Right.
Is what she meant about that, and
Okay.
that really helped Pontiac as well. That was like the initial turnaround before the big name companies came.
Okay. And what were your thoughts and did your plans change once you start learning about the new development? Were you thinking prices are going to go through the roof? Like, what was your mindset at that time?
And I thought it was over. I
Okay.
honestly thought it was over for me. Once prices got to about $100,000, I was like, "There's no way I'm going to be able to, save up $100,000 and buy a house."
Right.
It's extremely hard to save up, $100,000.
Right.
So I was like, okay, what am I going to do?
Right.
I ended up going to Flint. That was literally my thought. I was like, okay, I'm going to go to Flint.
Most people would have said, I'm going to start borrowing the money at this point. You said, no, I'm going to keep cash in first and go to a different area.
Well, there's only so much money, I'm aware of there's only so much money that I can borrow.
Right.
So if I don't have equity in the properties to utilize, I can't borrow from there.
Exactly.
You can only borrow so much credit based on your income with the
Right.
banks. So I was like, okay, if I could, maybe I can go to Flint, buy some cheap homes, do what I did in Pontiac. The values will come up, and I can come back to Pontiac again.
Right. Now, wait a minute. Before we get to Flint, at the 100,000 also, that don't fit into your formula, your price per square foot, right? Or does it?
Purchasing a property $100,000, the higher you go, it becomes very hard to call it a rental property from where I'm at.
Right. That's
cheap
everywhere.
properties work very well with rent.
Right.
Even if rent, gets up to $1,400, it's still a lot better to have the house underneath $50,000, in my opinion.
Right. Right. Okay. All right. So you went to Flint, and then
So I bought. So this was So in 2021, I bought my first house in Flint. It was like literally like the first few days of 2021, and I paid $35,000 for it. It's a 3-bed. Number one, I had to make sure I do this very safely because I don't know. I hear so much bad stuff about Flint, the water, the neighborhoods, the violence, all that stuff. So I was like, okay, I'm gonna buy it in the best one of the best school districts, one of the best neighborhoods, and I'm gonna make sure this house is remodeled just in case if I don't like it, I can just sell it right back. Right. So I bought it for $35,000. Like I said, it was a basic ranch. It was fully remodeled, clean. So at that time, it was $35,000 in Flint is a lot of money in that neighborhood. I'm just trying to put in perspective. So I rented it out for like $950. The amount of people who wanted to rent out the property, it was amazing. Like, I couldn't believe how many people came to the open house.
Right. For a 2-bedroom?
No, this is a 3-bedroom, 1 bath. Oh, okay. Yeah, but it was, like I said, it was fully remodeled. Oh, okay. So what I did is I refinanced that property. Mm-hmm. And during that time, there was an eviction ban that they said in 2021 in August. There was that was a second eviction ban. And I was like, okay, this might be a good time to go buy more. So what I did is I used the Genesee County Land Bank, and if you go to Genesee County Land Bank auction, you'll see the list of auction homes that they have. And with the Genesee County Land Bank, you actually have to show up to the property to bid on the property, which I like because it gets rid of a lot of those out of state investors, and it makes it it gives you kind of an advantage, because you have to be there that same week when they make that property available, and you get to go inside the property and view the property before you start bidding on it. Right. Whereas before I was bidding online, sight unseen. Mm-hmm.
So you was gambling. He went from gambling to being able to make a good decision based on what you see.
So when I'm going to these properties in the Genesee County Land Bank auction, I actually take my sewer camera with me. So I take my sewer camera with me. I go in there. I'm looking at the house. I'm writing notes down to see how much I'm gonna have to put in rehab. I make sure the sewer line. I'm mitigating all risk, all construction risk. Right. Because there's something that's gonna put me out. It's gonna be the construction. It's not gonna be the tenants. That's how I'm looking at it. Okay. So I ended up buying I bought 3 properties, in the Genesee County Land Bank auction, and I bought them all back to back, like because I was so confident in what I had done with the first property in January of
Right.
21.
How much did you pay for those?
I paid $22,000 for. I paid $22,000 for the second house in Flint. I paid $13,000 for the third, and I paid for the fourth one. I paid $20,000 for. So, and I was a backup. I was a backup offer for 2 of the properties. So I had lost the bid, and they just
came back to me.
Right.
Where you getting the money from?
Refinancing. I'm sorry. I refinanced the first Flint house, and I refinanced my first house all over again. Mm-hmm. Remember when I said the first house, it was only $40,000,
yeah.
Right.
But now the market's better. It appraised at $112,000.
Okay.
So I got $84,000 back, in a 30-year cash or refinance loan.
Right.
And I took all that money and I went and put it in, Flint.
And this is money he doesn't have to pay taxes on
Which is-
because
Right.
it's debt.
Mm-hmm.
Right. So have you sold any of your
no,
properties
it's-
other
yeah.
than the condo, or you still have them all?
Yeah, so that's a great question. I tell people all the time the way I'm investing is extremely slow.
Right.
It's low. I would say it's low risk compared to the other ways I could invest, and it's extremely hard to do because you're not flipping the properties.
Right.
I'm pretty much keeping all the properties. So
Right.
9 out of 10 properties actually kept. Only thing I've sold was the condo.
The condo.
Yeah.
Right.
Problems.
So
Instead of issues.
Exactly the one I get.
that land bank. So I put a note down here. There was a wholesaler online saying, and this was about the Detroit Land Bank. I don't know anything about Genesee County Land Bank to compare to.
Genesee County is easier.
Is it because the joke was not to buy anything on
I seen that.
the Detroit Land Bank because it's the junkyard for real estate, and then real investors don't buy there. So I was curious. So you're saying the Genesee County Land Bank is,
It's easier. I think it's more efficient. The process is.
but the quality of the property.
It's the land bank. You're gonna get the.
Yeah,
I mean, but
so like in
you're
general,
gonna get some cherries and you're gonna get some junk. But that's even with bank foreclosures, right? It's no different. It's just the problem. We talked about it before. The land bank properties, from the time they get into the land bank hands and the time they get to put them on the market, so much time went past. You get all the deterioration with the property. So, but
it's still a good reach. Like you should at least check it out and make sure.
you should check out everything.
Yeah, exactly.
As an investor,
But it's
you
a little
should
bit
write
different.
anything
'Cause
off.
I ain't gonna lie. I used to go to the auctions and get flips, but now, I don't go. I don't have the time to go there because now I'm bidding against homeowners
Right.
who have emotion tied into their stuff. I'm bidding against newbies who is emotional, and you know what I mean. So it's too much. You know what I mean.
Right.
It was cool when I was going in there and it was just investors in there. You know what I mean.
The
But
key
you
thing
not-
he said was he was the backup offer. That's the thing that stood out because he bid the price he was comfortable with that he knew he could close on. A lot of those people you mentioned are not going to close.
So that's a strategy, right?
Yep.
People in them auctions, they go in there, they try to, in the first auction anyway, actually in both of them, they try to go in there and bid it up real high, run you away, and then they'll drop it, and then they'll come back, which is why they start coming up with if you don't buy it, you can't come back to the auction shit.
But
right?
that's a tax auction versus the land bank.
Yeah, but it's
but
the
in
same
general,
thing,
the same concept
strategy.
works across
Yeah,
the
same
board.
strategy.
People try to do
So I make it appear that it was easy, and it was. I want to illustrate that how it was a little difficult.
Yeah.
I'm every week they're posting houses
Right.
for auction
Right.
through Flint, and what I was doing is I was going there, like using my lunch break to like drive out to Flint and go there and look at the properties.
Right.
And if sometimes the properties would be so bad, I would just drive right back home.
Right.
But that's like sometimes you have to drive for months before you see a property that looks good enough to restore.
You still working
Yes.
right now?
Yes.
Look, that's even think about that.
You know what? I'm gonna say. So I mentioned the book Outliers before because it talks about certain periods of time with certain people born in a certain period of time that had opportunities that were only available at that time. And his story kind of reminds me of Ashley. When she was on the show. And it's like Ashley had $7,000 tax return working at Red Lobster, but what she did with that amount of money during that time, just like what you did, somebody with 10,000 now probably couldn't accomplish that same thing. You know what I'm saying? In the same manner.
The time frame.
Yeah.
Right.
So that was a unique, once in a lifetime experience, and you're an example of that because whatever clicked in your head to say, let me go do this, worked for you. And a lot of people just missed that boat, and 2-3 years later, they like, oh, I wish where the $10,000 houses at?
Gone.
It's
So
gone.
we covered 2021. So at the end of 2021, we're at 2022. At the end of 2022, I recently bought another property.
Right.
But this one was this is in Pontiac. I finally come back to Pontiac,
Okay.
and this one had a tenant in it that was the owner passed away. The tenant was living there, Section 8, for 19 years.
Right.
Didn't want to get out the property. Made it very hard for the new sellers to sell the property.
Right.
And I came in. The property, they wanted $75,000 for the property. I came in and got the price down to $50,000.
Right.
And it was simply just because they had a relationship with the tenant as well.
Right.
I just explained to them that I'll keep the tenant for 35 days past the contract.
Right.
For free, and I waive all the inspections.
Right.
For this price.
Right.
And that's what got that deal done. But I'm in the process, over 3 months later, still in the process trying to evict the tenant out the property. I mean, we probably got the end of this month we'll have her out, but yeah.
But you saved $25,000, so that's way more than what you would have made in 3 months of rent. So it was worth it, right?
Yeah.
Oh, it's definitely worth it. The property's probably worth around $125. I'm buying it for $50,000. If I put $20,000 to it, I should be able to get double my money back.
Mm-hmm. Right.
Talk about that instant equity and lifestyle changes. Your mindset in regards to that.
So I don't advise anybody to sit and save money. I don't advise simply because it takes no one has 5-10 years to be saving $100,000. The easiest way to earn money, the easiest and fastest way, is to buy something that's worth a lot more. Whether it's a house, you can do the same thing you do with houses. You can do with cars.
Right.
You can buy a car, go to the auction. You can buy it for $5,000, and the car can be worth $20,000, and you can get a loan against that car. And probably the rate will probably be better. It'd be better than what we're paying today in mortgage rates for cash refinances. So you can do the same thing with probably a tractor, an expensive tractor. So I don't advise anybody to save any money. Always look for equity.
Mindset. You got the mindset, different mindset.
Right.
Yeah. Aggressive too, which is what you need. You can't be scared. A lot of people are fear-based.
Yeah,
you know what I'm saying?
The discipline and the structure. The discipline to even get to the point where you're saving money.
And you got to take risks.
And,
you can lose,
and
right?
investing. Yeah.
How's your lifestyle change with you getting into investing into real estate and getting your wife getting the real estate license and all that kind of thing?
So I'm taking less risk. I took all the risk early on, and I appreciate it. But now what I'm doing is I have a stock account as well. Right. So I'm trying to build that up because that's a good safety net if on a rainy day. I know that's a government protected as well, so it's kind of hard to lose that. I also try to keep a healthy open line of credit as well. So if I have a sewer pipe that ever breaks, or if I have to repair a roof, or something tragic happens, I can rely on a good amount of credit. That's pretty it for that.
Mm-hmm.
Yeah.
But what she's saying, did you go out and buy a big house for yourself, and did your lifestyle? Did you get the creep that people get? So I went from 50,000 to making 100. Now my expenses and my lifestyle creeped up, or did you kind of keep it even kill?
So I'm looking to make life easier.
Right.
Number one, my goal at the end of 2023 is to have at least one employee.
Okay.
Number two, I did everything in a Chrysler 300. So everything, all those homes I
All the
purchased,
material and everything.
I mean, you can imagine
Oh God.
ladders, buying drywall at Home Depot, cutting it in half and squeezing it through the trunk of my
Yeah.
Chrysler 300. I ended up buying I bought a Ram truck. So
Okay.
that was so I pretty much made, like I said, make life a lot easier.
Right.
I contract things out now. You know, a lot of the work out. You know, I
Right.
have the knowledge. So I'm trying to save time and spend more time with our family. So
So you didn't go out and buy the
No.
big house because you can. You didn't go out and buy you didn't get the Range Rover?
no, that's coming. That's coming. But
Okay.
but not,
All
but
right.
not
There
yet.
we go. That's what I'm talking about.
I'm still making moves. You know.
Right.
And you're so young.
Right.
I mean, in terms of you're young still. I mean, so you got a lot of
I got
moves to make.
grandkids your age. No, I'm just playing. No, it's just impressive because we all got kids around your age, and
First of all,
not
you're
that we
alive.
that old.
33.
I got
I got a
kids your
21-year-old,
age.
22.
Mine's a little bit younger than you,
My oldest is 32.
but the reason it's real impressive.
This
I don't know if
every,
y'all been like watching the media, like with Master P and his son and
Yeah.
50 Cent and his son. You see these 25, 30-year-old kids, and it's like you see this guy that just got it from the mud, really, like they say, right? With $10,000, and here you are, and we see kids, not just the celebrity kids, but we see kids that start off way more privileged and advantaged with access to money that don't have nothing close to what you built.
Because I'm going to say something.
So that's
He's going to be mad at me, though. I don't care. But, so my son,
Sorry.
he got his biggest check in real estate and they ain't been back to work since. It
That was for me, wasn't it?
Yeah, and it wasn't but $3,500. Look, right, for real. You get what I'm
That's
saying?
why you
That was
should
my
let
first
your son
employee.
go to school in Pontiac. See, that's the difference.
I also
I'm
use
sorry, y'all.
You might not make it. You
I
know?
also
Right.
use credit cards as well. So
Yeah.
I use
Yep.
credit cards.
Right.
I use them through Vibe.
Yep.
The reason why Vibe is because Genesis didn't allow past 25 grand at the time I was borrowing from Genesis.
Okay.
Vibe allows like up to like 35 grand.
Right.
It says right on the website there. So that was real helpful when I went to Flint.
We
Okay.
just talked about that in the episode.
Yeah,
before.
so we talked about on another episode about credit, because there's a lot of people teaching credit and credit card stacking and all this different stuff, but they're not telling people how to properly do it. But then most of the people they're teaching it to don't have solid investments to even invest the money in to be able to pay it back. So you're another example where, okay, if you're going to do this, if you're going to get this money, have a plan to use it so that you can pay it back and still keep all your profit, pretty much.
So you're building your credit, you're increasing your assets, you're keeping good trade lines, you're doing all of this to stay healthy in the market.
Yes.
And when people got to understand what he did, that other people are not. So he's buying houses or getting lines of credit, and he's paying them. You're paying these off, right? Have you paid any of them off?
No.
None of them?
No, my
You've just
goal-
been paying them.
I've just been paying them. The credit lines actually pay back with the cash out refinance money. So because those credit lines are expensive,
Yep.
they're under 5 years.
Yeah.
Where you can do a cash or refinance for 40 grand, that bill's only that
a
mortgage
couple
is only
$100.
like a couple $100. Yeah.
Right.
So
Yeah.
Okay.
So, but you're still. So you
only-
got seasoned credit.
Yeah,
you
It's
got
going
seasoned
back to
credit.
discipline.
Yeah.
Right.
You got real
And-
seasoned credit.
One of the other things I like what you did was you took this area, you maxed out what you could do in that area, at least for your strategy, and then you found another area that had similar opportunities, and then you're going to build in that area, and then eventually you probably go from Flint to I don't know, where was it, Carbondale?
Yeah, so
or-
the like thing I
Right.
like about what you, because I'm big on and it's specifically for Detroit because I'm a Detroit native and I'm just attached to it. But you're okay with seeing the development and understanding, like, these are things that are projected, and if they come into fruition, my property value is gonna thrive off of that. You have people who are kind of like, yeah, no, I don't trust it.
But you're not buying strictly on speculation, though. You're basing it on the current value as well as what you think it's going to be.
So that's a good question, good point. So when I look at Flint,
Right.
I'm looking at, I didn't really look at it like, oh, in the future it's going to be worth more. I'm looking at, okay, this property is in very good shape
Right.
for $20,000. If
Right.
I take $20,000 to Detroit, the quality is going to be skewed down.
Right.
You know,
Right.
you're just not going to get the same kind of quality of property. Like I mentioned before, I paid $35,000 for a fully remodeled home. Yeah. You know, at that time, you go to Detroit with $35,000, you're not getting a fully remodeled home.
Hey, we bought a piece of shit for $35,000.
Yeah, but what
So-
you're saying, but the current retail value of that home is $35,000, and because you have a cash flow strategy of renting that out, that's working for you. But if you were a flipper, then buying a house for $35,000 and putting $60,000 into it and selling it for $170,000 is a good strategy still. So it's still a similar mindset when you're talking about, the mayor changed. She was talking about these plans. The blight has improved. These structures are, remember the Silverdome, which is now is this and that. We've talked about this before. And I think you came back and just said somebody was like, I don't know if that was you or not, but somebody was like, yeah, I don't really want to buy property based on future improvements for the cities, wherever the city.
Mm-hmm.
Right.
But yeah, speculation. I wouldn't do that either personally. I don't speculate.
Well, it's not all based on speculation. There's gonna be a current worth and equity, but then there's also gonna be a future projection as to where it has the opportunity to go past there.
But if you speculating based on other companies, so for example, I wouldn't have been like Amazon coming here or whoever the fuck coming to Pontiac. I don't care. I know Pontiac has a lot of. So for me, Pontiac is better. It was had more upside to me than say, obviously than Flint, and then say a Detroit in certain areas of it, right?
Right.
Just because it's in Oakland County and it's it fit with my strategy, right? My strategy is to buy the worst house on the block and make it the best, right? Pontiac has the ability it's the worst house the worst city in the county, but you can increase. It has some ways to go up. You get what I'm saying?
Right.
But I'm not speculating based on businesses, whether it's United Wholesale, Amazon, Chrysler, whoever.
Look at it like this, where, okay, Flint's not surrounded by rich cities.
Mm-hmm.
You
Right.
know, you look at Pontiac. Pontiac's surrounded by Waterford, Royal Oak, Birmingham,
Right.
West Bloomfield. So like to leave Pontiac because you want to go find a cheaper place for rent is actually difficult. You're kind of trapped in
stuck.
Pontiac because
Right.
exactly.
And then them other cities, they spill over the Pontiac because when people can't afford there, they usually go to the neighboring city. And that's what we've seen with Royal Oak and Hazel Park and Ferndale.
and that's going to increase the Pontiac
Right.
values. You know what I'm saying?
So, because we running out of time here. We run out. I want to. What do you want people to know about you, and then how to find you and all that kind of thing?
I'm starting to, I just started offering services to for people to go to my Instagram and book now. Hit the book now button for consulting. If you guys have any questions, you can just click the book now button and follow me through Darius_1
Okay.
So it's spelled out 1 of 1, and that's where you can find me now.
All right. Cool.
Amen.
All right, that's a wrap.
All right.
Monday, 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 Monday.
Well,